Welcome to COIS ADMN 1620, Introduction to Information Systems. This is Chapter 10, Information Systems Within the Organization. Learning Objectives. 1. Explain the purpose of transaction processing systems. 2. Explain the types of support information systems can provide for each functional area of the organization. 3. Identify advantages and drawbacks to businesses implementing an enterprise resource planning ERP system. And 4. Describe the three main business processes supported by ERP systems. Chapter Outline. 1. Transaction processing systems. 2. Functional area information systems. 3. Enterprise resource planning or ERP systems. And 4. ERP support for business processes. Opening case. Capstone Mining implements ERP and experiences significant improvements in operations. What we'd like you to think about here is, why might companies and subsidiaries all need compatible or the same IS systems? And how do consultants facilitate the implementation and support of IS systems? Transaction Processing Systems, TPSs. The terminology we're going to talk about are transaction and transaction processing system, TPS, with source data automation, batch processing, and online transaction processing, OLTP. A transaction is any business event that generates data worthy of being captured and stored in a database. So a transaction could be a product manufactured, a service sold, a person hired, a payroll check generated. Within a TPS, source data automation is the attempt to automate the TPS data entry as much as possible. And that's because of the large volume that is involved. We discussed that in Technology Guide 1. Batch processing is the idea of a firm collecting a whole bunch of data from all the transactions as they occur, placing them in groups or batches, and then processing them periodically, say overnight. In online transaction processing, business transactions are processed online as soon as they occur. So if you paid for an item at a store, the system would record the sale and reduce the inventory on hand by 1 unit, which would increase the sales figures for that item by 1 unit and increase the store's cash position by the amount that you paid, while depleting the inventory, which could keep your website inventory numbers accurate. Transaction Processing Systems, TPS. Characteristics of a TPS include continuous real-time data collection, efficiently handles high volumes of data and large variations in those volumes. It avoids errors and downtime. It records results accurately and securely, and it maintains privacy and security. Figure 10.1, how transaction processing systems manage data. In this example, we're scanning a box of cornflakes, so that is a business transaction. It goes through the transaction processing system and into the organization's database. From that database, the functional area information system can access it, the decision support system can access the information, business intelligence can use the information, and various expert systems can use that information. There are also detailed reports that can be generated around that transaction. Functional Area Information Systems, FAISs. Information systems for accounting and finance, information systems for marketing, information systems for production or operations management, information systems for human resource management, and reports. Information systems for accounting and finance. These are going to handle the areas of financial planning and budgeting, managing financial transactions, investment management, and control and auditing. Financial planning and budgeting. These systems are going to handle financial and economic forecasting and budgeting. Managing financial transactions. Some examples: global stock exchanges. Since financial markets operate across the globe in 24/7, 365, distributed electronic stock exchanges that use the internet both to buy and sell stocks and to broadcast real-time stock prices. We could use them to manage multiple currencies. If we're trading globally, there are many different currencies. The values of those currencies are going up and down at all times. Perform a virtual close. Traditionally, companies would close their books quarterly because if you're publicly traded, you have to report on a quarterly basis. But now most companies or many companies want to be able to close their books at any time on very short notice. So they can do a virtual close at any time and have a real good idea of the organization's financial health. Expense Management Automation, EMA. This refers to systems that automate the data entry and processing of travel and entertainment expenses. They're generally web-based applications that enable companies to quickly and consistently collect expense information, enforce company policies, and reduce unplanned purchases, as well as airline and hotel expenses. Ultimately, they allow companies to reimburse their employees more quickly because the expense approvals aren't delayed by poor documentation. Control and auditing. Control and auditing involves budgetary control and internal auditing, and with that comes financial ratio analysis. Budgetary control refers to the comparison of the company's finalized annual budget and its actual operational results. Internal auditing is the function of skipping the reporting to management and reporting directly to the board of directors, having reviewed and validated the transactions and evaluating the organization's risk assessment and governance processes. Financial ratio analysis is another significant accounting and finance function that is used to monitor the company's financial health. These are a set of financial ratios, including liquidity, activity, debt ratios, and profitability ratios that allow a very quick analysis of how well the company is performing in various areas. Information systems for production/operations management. We're going to talk about in-house logistics and materials management, which is broken down to inventory management, including vendor-managed inventory, VMI, and quality control. We're also going to talk about planning, production, and operations, and MRP and MRP2, computer integrated manufacturing, CIM, and product lifecycle management. Logistics management deals with ordering, purchasing, inbound logistics, and outbound logistics. There are related activities which include inventory management and quality control. Inventory management determines how much inventory an organization should maintain. Excessive inventory and insufficient inventory are both problematic. Overstocking is expensive because of storage costs and the costs of spoilage or obsolescence. However, insufficient inventory is expensive because of last-minute orders and lost sales. Quality control systems used by manufacturing units provide information about the quality of incoming material and parts, as well as the quality of in-process semi-finished and finished products. Planning, production, and operations is supposed to be supported by IT. POM planning has evolved from material requirements planning, which was MRP, to manufacturing resource planning, MRP2, to enterprise resource planning, ERP. We're going to talk about MRP and MRP2 and examine ERP in detail a little later on. Computer integrated manufacturing, also called digital manufacturing, is an approach that integrates various automated factory systems. CIM has three basic goals. 1, simplify all manufacturing technologies and techniques. 2, to automate as many of the manufacturing processes as possible. And 3, to integrate and coordinate all aspects of design, manufacturing, and related functions through computer systems. Product life cycle. Within a single organization, designing and developing new products can be expensive and time-consuming. When multiple organizations are involved, the process can become very complex. Product lifecycle management is a business strategy that enables manufacturers to share product-related data to support product design and development and supply chain operations. PLM enables web-based collaboration technologies to product development. If we can integrate formally disparate functions, such as manufacturing processes and the logistics that support them, PLM enables these functions to collaborate, essentially forming a single team that manages the product from its inception through its completion, which is shown in the figure 10.2. Information systems for human resource management. There are three areas that we're going to discuss: recruitment, human resources development, and human resources planning and management as it pertains to payroll and employees' records, benefits administration, and employee relationship management. Recruitment is the finding of potential employees, evaluating those potential employees, and deciding who to hire. Some companies have a lot of viable candidates, and others have difficulty finding the right people. IT can be helpful in both cases. IT can assist in related activities such as testing and screening job applicants. With the millions of resumes available online, for instance LinkedIn, it's not surprising that companies are trying to find appropriate candidates on the web. Companies also advertise hundreds of thousands of jobs on the web, so online recruiting can reach more candidates, which may bring in better applicants. The costs of online recruitment are usually lower than traditional recruiting methods, such as advertising in newspapers or in trade journals. Human resources development. After employees are recruited, they then become part of the corporate human resources pool, which means they must be evaluated and developed. IT provides support for these activities. Human resources planning and management. In large organizations, managing human resources requires extensive planning and a detailed strategy. IT support is particularly valuable in the three areas listed: payroll and employees' records. The HR department is responsible for payroll. It's typically an automated process, which means that paychecks are printed or money is transferred electronically into employees' bank accounts directly. Benefits administration. In return for their work contributions to their organizations, employees receive wages, bonuses, and various benefits. Benefits include things like healthcare, dental care, pension contributions, RRSP contributions, wellness centers, childcare centers. Managing benefits is complex because of the multiple options that are available. Organizations typically allow employees to choose from the available benefits and trade off their benefits for other benefits. In many organizations, employees can access the company portal to self-register for specific benefits. Employee relationship management. In their efforts to better manage employees, companies are developing employee relationship management applications. For example, a call center for employees to discuss their issues. It's About Business 10.1. 3 Square Market puts IS inside their employees. What we'd like you to consider here is, what are the many different ways you could use a microchip that was embedded in your hand? Such chips are usually inserted in the skin between the thumb and forefinger. And would you consider having a microchip inserted? Why or why not? Figure 10.3. Examples of information systems supporting these functional areas. We have 3 levels: strategic, tactical, and operational. Strategic is at the highest level of the organization, with senior management deciding the direction of the company over maybe a 5-year period, potentially shorter or longer. Tactical is the shorter term, from higher management to make decisions on the fly, usually a year or so in the future. And operational is day-to-day decisions, usually made by the lowest level of management. We have the different functional areas of accounting, finance, human resources, production/operations, and marketing shown here. And if you look on the grid, you can see the sorts of information systems that would support these functional areas. I suggest that you take the time to look at them and understand how they pertain to the organization. Reports. Information systems produce reports. Routine reports are produced at scheduled intervals. They could be an hourly quality control report to a daily report on absenteeism. Although routine reports are valuable to an organization, managers frequently need special information that's not included in these reports. At other times, they need information that is normally included in routine reports, but at a different time. Such out-of-routine reports are called ad hoc or on-demand reports. Ad hoc reports can also include requests for the following types of information. Drill down reports. Drill down reports are going to display a greater level of detail. Instead of just looking at sales, you might be able to examine sales by region or sales by salesperson by drilling down further into the data. Key indicator reports. These summarize the performance of critical activities. An example is a CFO might want to monitor cash flow and cash on hand. Comparative reports compare, for example, the performances of different business units or of a single unit during different times. Some managers prefer exception reports. Exception reports include only information that falls outside of certain set thresholds. To implement management by exception, management first establishes those performance standards, and when something happens that's outside of them, they'll receive an exception report. The system alerts managers to these exceptions through this reporting. Enterprise Resource Planning, or ERP systems. We're going to talk about ERP2 systems. We're going to talk about the benefits and limitations of ERP systems, implementing ERP systems, and Enterprise Application Integration, or EAI. It's about Business 10.2. Under Armour finds a chip in their armor. What we'd like you to consider here is, do you purchase clothing online via an app? What kind of data do you provide to the app and thus to the store? And how could different types of business partners of Under Armour be affected by non-functional IT systems? ERP2 systems. ERP2 systems are inter-organizational ERP systems that provide web-enabled links among a company's key business system and its customers, suppliers, distributors, and other relevant parties. Figure 10.4, ERP2 system. This figure shows the ERP platform and database as the central unit connecting to all of the surrounding areas. At the top are the core ERP modules, which are Accounting and Finance module, Manufacturing and Production module, and Human Resource module. There could, of course, be more. And then we've got suppliers interacting with the Supply Chain Management module, and we've got customers interacting with the Customer Relationship Management module. At the bottom, including the last two that I spoke about, we have extended ERP modules, Business Intelligence module and E-Business module. So this gives an idea of how an ERP2 system could look for an organization that needs to be able to interact outside of its own boundaries to its customers and suppliers for maximum efficiency. Table 10.2, ERP modules, core ERP modules. We have three: Financial Management, Operations Management, and Human Resources Management. Financial Management modules support accounting, financial reporting, performance management, and corporate governance. They manage accounting data and financial processes such as the GL, accounts payable, accounts receivable, fixed assets, cash management and forecasting, product cost accounting, cost center accounting, asset accounting, tax accounting, credit management, budgeting, and asset management. Operations management modules manage the various aspects of production planning and execution, such as demand forecasting, procurement, inventory management, materials purchasing, shipping, production planning, production scheduling, materials requirement planning, quality control, distribution, transportation, and plant and equipment maintenance. Human resource management modules support personnel administration, including workforce planning, employee recruitment, assignment tracking, personnel planning and development, and performance management and reviews. Also, they deal with time accounting, payroll, compensation, benefits accounting, and regulatory requirements. Table 10.2, ERP modules, extended ERP modules. There are four: Customer Relationship Management, CRM, Supply Chain Management, SCM, Business Analytics, and E-Business. Customer Relationship Management, we're going to discuss this in detail in Chapter 11. These modules support all aspects of a customer's relationship with the organization. They help the organization to increase customer loyalty and retention and therefore improve the company's profitability. They also provide an integrated view of customer data and interactions which helps organizations to be more responsive to customer needs. Supply chain management. We're also going to discuss this in Chapter 11. These modules manage the information flows between and among the stages in a supply chain to maximize supply chain efficiency and effectiveness. With these modules, organizations are assisted in planning, scheduling, control, and optimizing the supply chain from the acquisition of raw materials to the receipt of finished goods by customers. Business analytics. We're going to look at this in Chapter 12. These modules collect information about the organization, organize it, and apply analytical tools to assist managers with decision making. E-business we discussed in Chapter 7. Customers and suppliers demand access to ERP information, including things like order status, inventory levels, and invoice reconciliation. They also want this information in a simplified format that can be accessed on the web. As a result, these modules provide 2 channels of access into the ERP system information, 1 channel for customers, B2C, and 1 for suppliers and partners, B2B. Major benefits of ERP systems. ERP systems offer improved organizational flexibility and agility, provide decision support, and provide improved business processes for increased quality and efficiency. Organizational flexibility and agility. ERP systems successfully break down many of the former departmental and functional silos of business processes, information systems, and information resources. That makes organizations more flexible, agile, and adaptive. The organizations that are using ERP systems can therefore respond quickly to changing business conditions and capitalize on new business opportunities. Decision support. ERP systems provide essential information on business performance across functional areas. This significantly improves managers' ability to make better and more timely decisions. Quality and efficiency. ERP systems integrate and improve an organization's business processes, generating significant improvements in the quality of production, distribution, and customer service. Major limitations of ERP implementations. Since ERPs are based on best practices, companies may need to change their methods of achieving business objectives by changing their business processes. Such practices are not the best for every company and may result in loss of competitive advantage. ERP systems can be complex, expensive, and time-consuming to implement. In almost every ERP implementation failure, the company's business managers and IT team underestimated the complexity of the planning, development, and training that were required to prepare for a new ERP system. The new ERP system is going to fundamentally transform their business processes and information systems. The major causes are failure to involve affected employees in the planning and development phases and change management processes, trying to accomplish too much too fast in the conversion process, insufficient training in the new work tasks required by the ERP system, and failure to perform proper data conversion and testing for the new system. Implementing ERP systems. There are 2 basic approaches. One is the on-premise ERP implementation, and the other is software as a service. In the on-premise ERP implementation, we have 3 sub-approaches: the vanilla approach, the custom approach, and the best-of-breed approach. The vanilla approach is when a company implements a standard ERP package using the package's built-in configuration options to differentiate it for their use. It will deviate only minimally from the package's standardized settings, and it can enable the company to perform the implementation more quickly. However, the extent to which the software is adapted to the organization's specific processes is limited. Fortunately, a vanilla implementation provides general functions that can support the firm's common business processes with relative ease, even if they're not a perfect fit for these processes. The custom approach. In this approach, a company implements a more customized ERP system by developing new ERP functions designed specifically for that firm. The decisions concerning the ERP's degree of customization are specific to each organization. The organization must carefully analyze its existing business processes to develop a system that conforms to the organization's particular characteristics and processes. It's expensive and risky because the computer code must be written and updated every time a new version of the ERP software is released. If the customization does not work perfectly for the organization's needs, then the system can be very difficult to use. The best of breed approach is combining the benefits of the vanilla and the customized system approach while avoiding the extensive costs and risks associated with complete customization. Companies will adopt an approach like this to mix and match core ERP modules as well as other extended ERP modules from different software providers to best fit their unique internal processes and value chains. Some companies are going to arrive at this approach the hard way. The text gives the example of Dell, which wasted millions of dollars trying to customize an integrated ERP system from a major vendor to match its unique processes before it realized that a smaller, more flexible system that integrated well with other corporate applications was the way to go. 3 major advantages of using a cloud-based ERP system, SaaS, software as a service, are: the system can be used from any location that provides internet access. Companies using cloud-based ERP avoid the initial hardware and software expenses that are typical of on-premise implementations. Cloud-based ERP solutions are scalable, meaning it is possible to extend ERP support to new business processes and new business partners, for example, suppliers, by purchasing new ERP modules. 3 major disadvantages of using cloud-based ERP systems are: it is not clear whether cloud-based ERP systems are more secure than on-premise systems. Companies that adopt cloud-based ERP systems sacrifice their control over a strategic IT resource. Lack of control over IT resources when the ERP system experiences problems. ERP support for business processes. The procurement, fulfillment, and production processes, which contain the procurement process, the fulfillment process, and the production process. Interorganizational processes, ERP with SCM and CRM, SCM and CRM, ERP SCM, and ERP CRM. Figure 10.5, departments and documents flow in the procurement process. We see across the bottom the documents involved: a purchase requisition, a purchase order, a packing list, goods receipt document, supplier invoice received, and payment sent, as it flows through the various departments, starting with the warehouse, purchasing, back to the warehouse, and to accounting. Figure 10.6, departments and documents flow in the fulfillment process. Again, the documents involved across the bottom, we have a customer inquiry, a quotation, a customer purchase order, a sales order, a picking document, and a packing list, and then an invoice sent and payment received. This flows through the sales, warehouse, and accounting departments. Figure 10.7, departments and documents flow in the production process. The documents involved are the planned order, the production order, the material withdrawal slip, the production order, and the goods receipt. They start in the warehouse, then to production, and then back to the warehouse, and then production, and then the goods receipt finally in the warehouse. Figure 10.8, integrated processes with ERP systems. This figure shows the 3 cross-functional business processes that we just discussed, and it specifically highlights the integration of the 3 processes, which is made possible by ERP systems. Interorganizational processes, ERP with SCM and CRM. Supply chain management and customer relations management help multiple firms in an industry coordinate activities such as the production to sale of goods and services. ERP SCM have the capability to place automatic requests to buy products such as fresh, perishable products from suppliers in real time. ERP CRM generate forecasting analysis of product consumption based on critical variables such as geographical area, season, day of week, and type of customer. Closing case. Touch Bistro point of sale solution. What we'd like you to think about here is, how do the Touch Bistro systems illustrate the features of ERP systems and of Enterprise Application Integration, EAI? And the last time you were at a restaurant, how was your order taken? What technology, hardware and software did you observe? That brings us to the end of this chapter's lecture. Thank you for your attention.